Good morning, everyone, and welcome to Money Talks with Attorney Coral. I am Attorney Coral Pleas, the host of this show, which is sponsored each and every week by Columbia Savings and Loan Association. Columbia Savings and Loan is 100 years old. It is the only Black-owned bank that's left in the state of Wisconsin. So very, very proud of that affiliation and very grateful to the bank for sponsoring this show every week. So we're happy to be here on WNOV 860 AM, which is 106.5 FM. I always want to say PM. I don't know. I think of that the wrong way and I have to catch myself every time. But yeah, we're glad to be here and glad to be on the air and thankful for the audience that listens and calls in. And every week we try to bring topics that relate to the notion of financial literacy. And I mentioned last week that April is Financial Literacy Month. So all month we want to bring shows that specifically target topics related to financial literacy, which is broad, I know, but I'm going to talk a little bit about what that means. And then later in the show, I will be having a guest that's going to join me, that's going to talk a little more real life examples of financial literacy and why it's important to have an understanding of what that means. So later in the show, I will be joined by Mr. GULBAZ GILL, who is the Executive Director of Lending and Finance with Columbia Savings and Loan Association. So he'll be joining me maybe halfway or so through the show. But for right now, it's me. So please, I want to just start off by giving the phone number here at the station, which is 414-444-5250. That is 414-444-5250 and 5253. Jermaine is looking at me, giving me the thumbs up because I finally got that right. I am so bad with numbers. You know, I'm one of those people that the smartphone dumbed me down, right? When it came to remembering phone numbers. I used to know people's phone numbers. I don't know my own mother's phone number anymore. I know my phone number, but that's about it. But you don't even know your mom's number, Jermaine. So I'm not alone. I'm in good company. I'm in good company. Okay, so financial literacy, everybody. That's the topic for the day. It's the topic for the month, but it's such a broad one that we're going to be able to do multiple shows that deal with the topic of financial literacy. All right, so what is financial literacy? Financial literacy is the ability to understand and use financial skills and concepts. It includes skills like personal finance management, budgeting, and investing. It also involves understanding financial principles like managing debt and financial planning. Financial literacy can help people avoid poor financial decisions and achieve financial stability. Okay, so what are some of the primary concepts of financial literacy? And again, this is just overview type stuff right now. Budgeting is one important concept of financial literacy. And we talked about that a little bit on a prior show. Maybe one of these weeks in April, we'll go into a little more detail of what budgeting consists of. I like talking about that one because even if you set just a general budget, it can help you to achieve certain goals. I used to do some teaching around this topic of budgeting for a local community organization that was assisting people in the homeowner process. And one of the exercises that we would go through is helping people to do calculations based upon their own personal individual earnings so they could really see how much house they could afford to buy without straining their budget. So we can talk about maybe that sort of thing a little bit more on a later show if there's interest. Another primary concept concerning financial literacy is the concept of saving, right? So it's always a good idea to have a little money socked away if you're able. I know it can be hard because, it's tough out here. The cost of everything is so high. And I still don't personally understand this connection between COVID and why, my ribeye steaks are double the price they used to be. If anybody can shed any light on that, please feel free. Um, but yeah, I'm saying that a little bit tongue in cheek, but just to bring a little levity, a little humor to this very heavy, serious topic. But I know that saving is hard. Saving money is hard because people have expenses. You've got bills to pay. You've got rent or mortgage or whatever the case may be. And depending upon, what do people say? I've got more month than I've got money. It can be hard to save when you are living check to check and there's really not extra money there. So I'm sensitive to that. And that's something that we can talk through. I know I brought that up on the show once before, and there were some listeners that weren't real happy that I was encouraging people to save because they were saying, look, we're trying to make it, you know? And so I understand the reality of that, but that's a topic we'll talk more about. Another important concept of financial literacy is debt management, right? So that's part of the issue that some people have is the debt that some of us carry. Now, sometimes you can't help it depending upon what that debt is, but a lot of people run up unnecessary credit card debt and it drags them down. I hate to see that because that's something that if it's managed correctly, it can be avoidable. Um, there are other times the debt may be medical bills and that sort of thing. And I actually do want to talk more about that on a later show because I understand that there's been some changes to the laws in terms of how medical debts can be counted or not counted as relates to your credit score and credit reporting. So there's some new legal information that I came across a few weeks ago doing some research that relates to that topic, and maybe that can be a topic of another show. Um, Credit is another important concept of financial literacy. I mentioned it a little bit a moment ago related to debt management, but credit, what I mean in this context is credit scores, right? Like um, and I say this all the time on the show, and I never remember who to give credit to for this statement, but you manage what you measure. You can't manage something if you don't measure it. So I always encourage people to take advantage of the fact that you can go to freecreditreport.com at least once a year and know that you can obtain a copy of your credit report free of charge. And I do believe it's from all three of the primary credit reporting agencies. So that would be TransUnion, Equifax, and Experian. Those are the three major ones that if you go to creditreport.com, one time a year, they will allow you to pull your credit report so you'll know where you are. You can't fix your credit if you don't know what your credit is. You can't improve your credit if you don't know what is on your credit, right? So don't stick your head in the sand and ignore it and hope that it goes away because the day will come that you need it. And if you get out ahead of it and start seeing what your credit looks like, what your credit score looks like, and um, pay attention to what can be done in order to approve it or clean it up. Maybe there's things on your credit report that should not be that you can perhaps have removed. And I really I've seen that happen, especially with people who have either the same or similar names as others, whether it's a relative whose name you share. Sometimes it's the father, son, the junior and senior, that sort of thing. Or sometimes it's a person that you've never met a day in your life, but you just have a common name that you happen to share with other people. So it's important to look at your credit report at least annually, and you can do so free of charge at freecreditreport.com. And then there's many other concepts of financial literacy that we could talk about. Um, One that we talked about a couple of weeks ago when I had Mr. Gill on the show at that time, we talked about the concept of equity, which seems so basic. And in banking especially, we talk about equity all the time and we throw that word around and just assume that everybody understands. But, I found out just in talking to certain family members that people did not necessarily really fully have an understanding of what is meant by equity. So I thought that GULBAZ did a good job. And when he comes, maybe I'll have him go back over that again today, because he did such a good job of explaining that and using examples that I think people could relate to. That that's important. So the other concept that I would like to talk a little bit more about today, that is again related to financial literacy, is that topic that I pound away on more than anything else when I'm here, and that is the topic of estate planning. And again, when GoBoss comes, we're going to give an example of why estate planning and how estate planning relates to financial literacy in a very real life type of example. And I will encourage at that time, again, for the audience to call in with anything that you would like to add, any questions, any comments, or any concerns. And again, the number here is 414 444 5250. That is 414 444 5250 or 5253. So you'll be able to join the conversation when we start talking in particular about a particular estate planning topic that can relate to the banking industry. Okay, so for right now, I'm going to shift gears and talk a little bit about the powers of attorney as an estate planning tool. One of many that we have talked about before, but one thing that I've learned, because I appreciate how people listen, and sometimes people will even call the bank and talk to me about the radio show. And I hear so often that people say, "Hey, talk more about, power of attorney." I get that one a lot, for whatever reason. So I, don't mind going over some of those materials again here today, because I have gotten calls to that effect. Um, so we'll circle back and talk a little bit more again about how some of the estate planning topics relate to the banking industry. But let me just briefly go over this notion of power of attorney. Oh, okay, sure. There's a question in the studio. Go ahead,
So
Debo.
is there ever a time that I know we talked once before about power of attorney, and you stated at that time that basically POA dies when the individual passes.
Right.
Is there ever a time that is not the case?
No, there is never a time when that is not the case. By law, if a person passes away, the power of attorney is over. It ends with death. So it's, even though it's, in my opinion, one of the important tools
Hmm.
that you may want to have in the course of your lifetime, which is why I like to talk about it so much. It really, my recommendation is always that people sit with a qualified estate planning attorney to give some guidance about what course of action you'd want things to take upon your death, knowing that the power of attorney does not survive that.
Does power of attorney supersede spouse?
Um, that's a good question. I'm trying to think of an example where that might be. It can be a little bit muddy, and that might be a question for a court. I don't know if I can give a definitive yes or no for that type of question, because I'm thinking of a situation where, let's say for instance, there's a husband and a wife, and the husband designates power of attorney over, I don't know, some money or real estate or something like that. And if those items, the money or the home or whatever it is, acquired during the course of the marriage, then there's an argument that the wife has marital property rights that might supersede anything that's in a power of attorney. So that could be a tough one, Debo. I think it might be fact driven, um, in terms of timeline and those sorts of things and
Hmm.
what types of assets you're talking about.
Hmm.
But that's where things get muddy, and it's good to try to get some counsel on the front end to try to avoid a court battle later, because that could be a tough one. And I'll tell you, I had a case not too long ago. It was towards the end of the year last year, where there was a husband and a wife, and they were going through a divorce. And I'm not kidding you when I tell you, about 1 week before the divorce would have been final, the
Hmm.
husband died. So technically, his wife was still his wife. Well, she had become his widow. And in the meantime, this gentleman had worked for the city of Milwaukee for many years, and he tried to leave his pension benefits to his sister rather than to his wife. And the city of Milwaukee started paying out the benefits to the sister, and then the wife said, and she filed a lawsuit.
Mm-hmm.
And I mean, they slugged it out in court to the point where they finally had to agree to a compromise between the two of them. And it just created a great big mess. But it's similar to what you're saying in that
Mm-hmm.
the husband said, nope, this is where I want it to go. But the wife was like, nope, first of all, I'm still your wife because the divorce was not final. But secondly, there are marital property rights that you can't just give certain things away.
Mm-hmm.
So that is such a good question. I wish I had a yes or no type answer for you, but I
I'm
do
glad that
think
you
it's
don't.
really fact driven.
I'm glad that you don't, because we'll use it as like homework for you to be able to come back and tell us some next week.
Yeah, there you go. Absolutely. No, that's good. That's good. But yeah, I think that that's going to be something that's, based on the fact pattern, that's going to be a fact driven type of question. So I guess um, my educational point, because I'm not giving legal advice over the air, but my point
Right.
would be to the audience, if you are married and if you are even thinking about leaving things to someone other than your spouse, get yourself an appointment with a good estate planning attorney to see whether you can or whether it's advisable that you even try to do such a thing or not, or if you choose to do it anyway, what the consequences of that may be, just so you're ready. It might not be such a smooth transition because marital property rights are real, especially in the state of Wisconsin.
Mm. Thank you.
Excellent. Thank you. No, thank you for that. Um, okay, so I was going to talk a little bit too more about the power of attorney in terms of what that means. What is a power of attorney? A power of attorney is a legal document that is provided pursuant to statute in Wisconsin. And Wisconsin is one of 26 states that has adopted the Uniform Power of Attorney Act. And it's set forth in Chapter 244 of the Wisconsin statutes, and it does grant authority to someone other than you to manage your affairs. So, to that end, I always say it's a big deal um, because this is something that takes place when you're alive as opposed to something that takes place, in a will after you pass away. So, this matters because it affects you in your real life existence. I know when one of my paralegals was on the other day, Kelly, she mentioned that she had a college age son and she got a power of attorney for him to be able to handle some affairs while he traveled abroad. So that came in handy. It was able to be used for that purpose. He's an adult, so she needed that in order to transact on his behalf. So there's real life legitimate reasons why we need paperwork like that because it does matter what happens while you're alive and well, and everything isn't just about after death. So that's why the power of attorney is so important. So okay, I'm looking at Jermaine here who's signaling me that it looks like it's time for a break. When we come back, we'll talk more about financial literacy. And again, please call us 414-444-5250 or 5253 if you'd like to join the conversation. We will be right back after the break. Money, money. Attorney Coral. I am Attorney Coral Pleas, the host of the show, which is sponsored every week by Columbia Savings and Loan Association. And I mentioned in the first segment of the show that I would have an honored guest joining me here today, Mr. GULBAZ Gill, who works with Columbia Savings and Loan Association. Good morning, GULBAZ.
Good morning, Coral, and good morning, all the listeners.
Yeah, thank you for being with us today.
Thank you for having me.
So, I did mention that you work with Columbia Savings and Loan Association, and you are our executive director of lending and finance. Does that sound about right?
Yes, ma'am. That's right. I also want to add that I'm more of a relationship manager. Also, my job is to help Columbia grow, to help community grow, and as I mentioned in the previous discussion, also help community grow by helping them in their financial needs. But I strongly believe that my real role in Colombia is to have great relationship between Colombia Savings and Loan Bank and the team and our community around us. That's what we are trying to develop at this point, and that's our goal is.
Yeah, and I'll just make this observation that I like how you operate. Like I like how you work. I notice how it's your preference is to meet each customer, that I see how you book your day, customer meeting, customer meeting, customer meeting, because I get the notices, and I'm always invited and welcome to join you in the meetings, but I don't usually make it. And that's because I got my head down somewhere doing paperwork because I'm such a lawyer to my core. That's just who I am and that's how I work best. But you are a people person and that's important in
Thank you.
community
Thank you.
banking.
That's my goal is Coral at Columbia. I really want. I believe on shake hand. I believe in looking into eyes and talking to our folks. Um, and I want everybody to come in not with their goods but their challenges also. If they're having challenge, come and meet us. Let's figure out how to develop this relationship better, even if it's sour or even if it have disconnect. That's our goal is. So
Yeah, no, and that's really important, particularly as relates to community banking, wouldn't you say?
yeah, yeah, absolutely right, and that's why we call ourselves community bank, right? Uh, large enough to serve you and small enough to know you.
Yeah.
Yeah, that's the
Oh,
thing.
that's right.
Yeah,
We did. I
yeah,
think
yeah,
we coined that phrase last time
yeah,
that we
yeah,
said that
yeah.
that's exactly
So
the
that's
way Columbia
exactly, yeah.
operates.
That's
So,
how it's been operating for 100 years.
mhm.
That's the goal.
Yeah, so we're glad to have you on the team. So, one of the things that I was going to ask you to talk about a little bit again today is the concept of equity. Because, again, this is April, it is Financial Literacy Month, and these important topics in the financial industry, I want to make sure that people understand what these things mean. So before we move on to one of the examples that we were going to talk about with estate planning, would you mind refreshing the recollection of the audience and just talking about equity and what that is,
Sure,
what that means,
sure,
and why it's important?
sure. As everybody know that I'm a lender at Columbia, and in lending, we consider equity as your asset. I'm not trying to confuse, but I purposely said that, and I'll explain it in a minute. If you buy a house and you have paid down payment toward it, that portion which you pay as a down payment become the equity, cash converted into real estate portion, which is the equity of your side. The remaining portion which we finance or any bank finance, that is the debt on the house. So any portion which is available for you, it could be in a house, it could be in a car, or anything you can get loan on. That portion is your equity. Now, there is one thing I really want to mention, Coral, if you give me a few more minutes, is equity also built over time as well. I'll give you an example. You buy a house today for $100,000. You put $20,000 down to as a down payment slash equity, then bank lend you $80,000. But over the course of time, we have seen in historically that real estate value most of the time go up. So After 5 year or 10 year, now your house is valued at 120,000. Your loan was 10 years ago 80,000, which is down to 70,000. So technically you have $50,000 equity available. One, 20,000 you put in, then 30,000 out of the money you pay to the bank, that portion, and plus the equity you gain over the time on your house, that is also yours. Because if you ever sell it, look at this way, if you ever sell your house will sell for 120,000, but the loan you but you but the loan portion you have on this house is only 70,000. That portion, after paying the bank, is yours. That's the equity you build on that specific house, business, or whatever you want to think of it. That's what that's what equity is. Equity is your asset which you gain by putting down payment or by increasing value of that asset.
Right, because properties tend to increase in value over time,
Yeah.
right?
So that's why it's a very good investment.
Yeah.
Yeah.
Yeah. No, that makes sense. That makes sense. And I love that explanation, Gulbaz. I think that I'm hoping that makes it clear to the audience in terms of what equity means. Because again, I wanted to bring it up and have you talk through it again because I've been having conversations with people of late that made it really clear to me that they didn't fully understand that concept. And we're talking homeowners,
Yeah.
so so it's important to really know what you've got.
I want to talk to community also. Since we're talking about equity portion, I'm seeing in Colombia, especially, and it could be any bank, that people have a lot of equity in their houses right now. And what's going on is they are not focusing on securing that equity. When I use this word, please, anybody who's listening, please listen carefully. Securing equity is also very important because if you're not paying debt on that portion which you owe to any FI is financial institution, that portion can be loose. So if you have ton of equity in your house, please make sure go talk to your banker, explain him your situation. Even if you're going through some hard times or anything, please make sure do not ghost on your banker. Come and talk to your banker and explain them your situation. One thing I want to say to everyone is that banks are your friends. We are not we never go against you. You know, if you come and talk to us and explain us your situation, we will definitely listen. We will always want to work with you. Remember, our inventory is cash. Our inventory is not real estate. We never want to be in real estate business. We never want to be taking anybody's equity away. That's why I'm very vocal about securing your equity, working on your equity, saving, and knowing your equity. That's very important. Knowing the value of your asset, business, house, whatever it is, you need to know how much the value is. Keep talking, keep going to the website, keep looking at. I don't know if I have liberty to say those names, but there are websites which can give you your assets, and those are open. They don't cost you anything. They can tell you what the value of your property is. Then you figure out how much the loan against that property is, and then you'll see that sometime you have hundreds of thousands of equity which we don't even realize that that money is sitting with us. We could work with it, we could refinance it, we can go to the banker and fix it and secure that portion which is, I'm repeating, hundreds of thousands of dollars. So please know your equity.
So just to be clear, when you talk about securing your equity, what exactly do you mean?
So for example, if you are having some tough times and there are some delinquencies and there are some problems going on in family or whatnot in business, or I call it sometime financial winter come globally and sometime financial winter come individually. So I personally can have financial winter. When I say financial winter, that means tough times on us. At that time, talk to your banker, talk to your real estate agent. If you want to sell that property, if you want to keep that property and you have debt on it, talk to your banker, talk to your accountant, talk to your attorney, and see how you can secure it. Because sometimes when we have challenges, Coral, I've seen we don't pay our bills which are in front of us, which are due to the certain institutions, and we don't realize that by not paying it, this business, this house we have, has quite a bit equity. And we have seen previous few years that property values gone on some instant double. If you can't afford it, sell it so you can gain that equity, pay off debt, and then get the remaining funds and get a better house or a smaller house or a smaller business, or invest that money to some other business or real estate. But do not just let it go for some time, just $2,000 or $3,000. So that's why when I use the word secure your equity, make sure that you and to know that, Coral, you need to do some research. As I mentioned, go online. Just put www. There are many real estate agencies, and I think I'm gonna just say it. It's a Zillow.com. There's Realty.com. Those are free. Just put your address in. It'll tell you what is the value of your house is right now, and then see what's the debt. And I promise you, you'll be surprised that your debt is very minimum, and your house is valued 200,000, and you've been paying. Here, let me just say, if you're paying mortgage for the last 10 years on your house, I promise you, matter of fact, you can challenge me, there is at least $100,000 equity in your house. Go and check on it. I highly encourage that. Do not let that go. That's what my point is. Secure your
Right.
equity.
Right. So it looks like we do have a caller that's holding. So caller, thank you for waiting. Go ahead with your question.
Good morning. I'm glad you're feeling better.
Oh yeah,
Say,
thank you. I am. Thank you so
say,
much.
say hi to a sister for me. I called Kelly and uh, Angie there and told them to told them to tell you to call me. I could give you
Oh,
some remedies there. So,
okay.
but
Okay.
you can still do that. I'll talk with you because I didn't want to take up airtime. But
No, go
Mr.
ahead with your question. Thanks for calling in.
Mr. GULBAZ,
Yes.
yeah, Tyrone speaking. Just really quickly, then I'll get off here. But I want to get in touch with you too because I want to help you. Want you to help me with a business venture.
Oh, for sure. For sure.
Okay.
Yes.
Looking forward to meeting you.
For sure, Mr. Tyler.
Just very quickly, I didn't know that the city confiscates a whole bunch of foreclosed, and I don't know if they can flip those or whether if they're selling them to people that's coming in and just buying them and renting them out. And it makes me think, if a habitat house can be, earned through Habitat Habitat for Humanity, and then confiscated or even sold and flipped. I'm wondering how that process would work. If you had anything on that, then I'll listen to you over the air. Over the air. Excuse me. Thank you.
Thanks, Tyrone.
Thank you, Tyron. Do you want me to respond about it?
No, yeah, go ahead,
Okay.
Gobaz, if you
Sure.
know something
So,
about
in this kind of situation, the best thing is that you talk to the city, and they'll be your first liaison. And once you secure that property which they offer you to purchase, then you should contact a bank, or 99% people invest their own money, because those habitat building and those confiscated properties are sold very minimum amount, on a very minimum amount to the developers, people who promise to keep them in a good shape for next several years. There's a whole process to it. I don't want to talk about it, but that is something which city and the developer have a contract between them. When we talk about the financing side, yes, we can definitely help. You can come in and set up an appointment with us, and we can go through with your business plan and see what kind of plans you have, and we look into it for sure.
Okay. Thank you. Thank you for that. And Tyrone, hopefully that answers your question. So, Gulbas, before we move on, there was another thing that I wanted to just ask you. You talked about the importance of customers coming and talking to the banker and letting them know, especially if they've fallen on some hard times and, there may be some difficulties and the bankers want to hear, they want to know, they want to talk to you. Is it your experience that larger banks are receptive to the individual customers like that, or do you think that's really a concept more um, known in community banking?
Great question, Carl. I will answer that, but I just want to go back to time. He brought up a very good point that city takes some houses back. And a few minutes ago, when I was talking about securing your equity, that is another portion. Many time houses have property taxes due for several years, and those are minimum amounts, and sometimes they cannot afford it, and those beautiful houses can be taken from them to the city. So that's another thing I just want to bring it up. If you have property taxes due, please talk to your banker. Go to the nearby financial institution and see if they can help you refinance that house and secure those funds which you owe to the city. That is another thing where you can save yourself. Bigger bank versus smaller bank. There's no versus, Coral. I mean, like, bigger banks like to hear it too. I'm not gonna say that they don't. uh, but bigger banks don't know what's going on in community. They have a bird eye view to see, like, to see everybody from the top. Us small community banks are in the community, so we can know the pain of our community which is around us way better than they could. Again, nothing against them, they do help. There are programs where people can go and explain them, but many time it's more challenging to reach them and to explain them, because keeping in mind their lenders hardly come to the, and again, I'm not trying to say they do care, they do. Hey, both of our businesses funding, both of our businesses selling cash. So it's not about this, it's about when we are working in small community, when we are a small bank, we know everybody.
Sure.
So
Okay. No, that's a good response. Looks like we have a couple of callers. Caller, thank you for holding. Please go ahead with your question. And if you don't mind, please, if you could turn the radio down. It looks like we're getting a little bit of feedback.
Gotcha.
So thank you for that. Please go ahead with your question.
Question for the banker. You said securing the asset and the equity, securing the equity. Question in regards to where does the credit score need to be? Expound on that, and and assume you're referring to more of a refi or HELOC.
very good question. Credit score has, so let me tell you the importance of credit score first. Credit, in our banking we have 5 C's. Out of those 5 C's, we call credit, which is also known as knowing the person, knowing the that borrower's pattern of living. That's why we pull the credit. I've been trained that credit bureau. I came from a traditional bank, and we are not too much in credit scores, though there is a value to it, but we see credit report as a pattern of the person, that how his payment history is with other creditors. So if your payment history is great, but you have medical issues going on, where you have some bills to pay and that's sitting on the credit bureau, we in Colombia don't look at like negatively. But if your payment history is great, but you don't have large credit, because credit score also build when you have credit cards, you use them, you pay them back, you have cars, your houses, that build your credit to 700s to 800s, right? But if you have just 2 or 3 credits and you have smaller credit, but you're paying them clockwise, every month you pay them, your credit score is not going to be 700 800 score. So what we at our institution see is your payment history. Even if you have lower credit score, but your payment history is great, we will definitely like to work with you. But if your payment history is not great, where you're lacking on payments and you have three missed payments or four missed payments, and you have a car which is your livelihood, which is getting a repo, we gonna we gonna look at it why. Then we have to see why this thing happened. Again, we're not saying no, but we need to have why in it. So if you go to any bank and you have lower credit scores, ask your banker to see your payment pattern. If your payment pattern is good, you're making payments, there's no delinquencies, there's no repos, there's no foreclosures previously, banker will look at you different. The credit score important, but in community banking, not so important for us. That's why, as Coral earlier mentioned, that personally, that's how I've been trained from different institutions, that I like to meet person. We don't just plug your numbers in the system and say yay or nay. I mean, if I have to put the credit score in the computer system and say this, like we have algorithms which says we're gonna do deals only with 700 score to 800 score, people are gonna be denied, right? That's why I like to meet and know the person and have an interview with them where I can see like why the credit score is low. What is the reason? The reason could be, as I mentioned, maybe maybe you don't have much credit. Your person is living all his life on cash, and I know some of my customers, and they don't like to have credit at all, so their credit score is going to be low, but man, their payment histories are amazing. So it it's in our lending side, it's all case by case. In community banking, now, I don't know about the other banks.
Okay. No, thank you for that, GULBAZ. Caller, did that answer your question? Oh, okay. So this is the other caller?
Yes.
Okay. I'm sorry. Sorry that you were holding. Thank you so much. Please go ahead.
Hi, I have a question. I have a mortgage that uh, that I'm trying to pay down, and I wanted to ask the banker: is it best for me to pay double on my
Ma'am.
payment?
Sorry, ma'am, it cut off. You were going to ask the banker and then your question got cut off. Would you mind repeating, please?
I was okay. Can you hear me now?
Yes, now we can.
I was going to ask you. I want to pay down on my mortgage, and I need to pay on my principal or on the interest.
So your question is that you would like to pay your mortgage
Can you hear
down.
me?
Yeah, I'm trying to repeat it back to make sure we got it. That you would like to pay your mortgage down, but you're asking if you should pay on your principal or your interest. Is that the question?
Double payments, right? Extra money. Yes.
Double payments. Okay, thank you so much for your call. We'll go ahead and answer.
Okay. So, ma'am, anytime you make a double payment, it automatically goes toward your principal. Interest is on the balance of the loan. So if you come up and make double payment, your second payment, first payment, we call it P&I, which is principal and interest. The second payment which you make, we will consider it as principal reduction, which means like if you make $1,000 extra payment, now your loan will be $1,000 less than your previous month was. So it will go toward your principal, in short.
Okay, so I'd like to thank the callers. We appreciate those questions. Keep them coming. It looks like we do need to take a break. The number here is 414-444-5250, 414-444-5250. This is Money Talks with Attorney Coral, special guest GULBAZ GILL from Columbia Savings and Loan Association. We will be right back after the break. Welcome back. This is Money Talks with Attorney Coral, and I have in the studio with me this morning Mr. GULBAZ Gill, who is the Executive Director of Lending and Finance with Columbia Savings and Loan Association. And I asked GULBAZ to come in this morning, particularly because April is Financial Literacy Month. And there's so much to talk about. The callers have been excellent, but I already know we're going to need to bring GULBAZ back again to talk more about some of what we plan to talk about today. But I know there are a couple of topics, GULBAZ, that you would like to at least touch base on before we end the show today. So please go ahead.
Sure. Coral, this is a financial literacy uh, week. So you and I were talking about it yesterday. I just want to share some thoughts with our listeners. A few months back, as I always say, my father-in-law is a pastor, so I was in a church. He asked me to talk to the congregation in regards to finances. I just want to share this with everybody. I know Coral earlier touched some bases on this one. I strongly believe if we want to be successful, and many times we say, hey, we live paycheck to paycheck, we cannot afford this and all that stuff. I tell everybody to make a checklist for yourself. And many times people write it, and the very first few things which I see in them is number one is a cell phone. I need a new cell phone. I need a new car. I need new sneakers. And then maybe I need a house, and then business. So, in my eyes, your first three things, which is your new cell phone, your new sneakers, your new car, is not that important. So, that's where want versus need comes in. Um, uh, where I'm from, we have a saying. We say the business build house, house don't build business either. So make sure that you create your business first, your income resources first, and then you go for the luxury of the life, and you'll enjoy more luxury than you ever can even imagine. Instead of buying a new phone, you can buy phone uh, made of gold, so so things like that. If we budget ourselves, as Coral earlier said. And one more thing I want to just I know we have a short time, I want to bring it up is this thing works for me, my family, all my life. When I get a paycheck, I divide that into three portions. I call it 70% what I'm going to live off on, 20% saving. We will not touch it. We will definitely not touch that money. It's going to go to my child's, what my saving or our savings. And then 10% I give it to God, because that's his command is to us, as a tithe. So 10% God, 20% for your saving, for your future, and start living on 70%. Once we start living on 70%, we will say, hey, that's all we have. That's what my paycheck is. Your paycheck is not $1,000. Your paycheck is $700. So I promise you, if we budget ourselves like this, come back to me after 2 3 years and tell me that you will have quite a bit money in Columbia Savings and Loans. So please, put that 20% on the side. Don't even look at it. Give 10% to God, and I promise you that he's going to give you a lot of blessing, and the 70% you will be living off on will become 700%. He promised us. So thank you so much. I think we are out of town.
Yeah,
time,
no,
Coral?
I love it. I love it. So let's just sum that up. 70, 20, 10
Yes.
and needs versus wants.
Needs versus wants.
All right.
Yeah.
I think that's it.
Yeah,
Those are
yeah.
those are some wise words to live by and to kick off the financial literacy month of April with those words of wisdom from seasoned 20-year veteran banker Mr. GULBAZ Gill. Thank you, GULBAZ.
Thank you. It's
for
my
for
pleasure.
coming to the show today. Okay, so that's our show for today. And oh, okay. I noticed that there was a caller, and I was going to say that we would go ahead and try to get that in, but it looks like that caller. Okay, well, we've got a couple more minutes then, GULBAZ. I thought that we were going to cut it short to get back to the caller. But is there any other financial literacy words of advice that you would like to offer then before we end today?
I'm going to echo what you mentioned earlier about state planning. It's also financial literacy. If we have assets, my listeners, please go to your account, to your attorneys, find a better attorney, do your estate planning. We have recent incident at the bank where somebody passed away, and her family came in, her daughter or son, I don't want to mention the names or anything, and I don't want to, and they have hard time right now doing it. They have to go through probate, they have to go to the court, they have to do all that stuff, assume the debt of the person. Of course, if they want to assume the equity, they have to assume the debt of that specific asset also. So not to have these problems and not to give grief to your offsprings, your children, please go and talk to your attorneys, find some good state attorney, and make it easy for your next generation.
Okay. Well, I certainly echo that concern. That's something that we've seen come up in the banking scenario many times.
Yeah.
And people think that assuming a mortgage from a loved one is an automatic process, but it really
It's a
isn't.
long process.
There can be some steps to that. And a good estate planning professional can help you to avoid those things by certain tools, whether it be a transfer on death deed or maybe putting the property, deeding it to a revocable trust. And again, those are case by case, fact sensitive type scenarios that the best thing to do is to speak to a qualified attorney that can help with those matters. The phone number for my law firm is 414-247-9570. If you need help with estate planning, please don't hesitate to give us a call. So thank you all for listening. Thank you for the callers from today. This was Money Talks with Attorney Coral, and my special guest was GULBAZ GILL from Columbia Savings and Loan Association. We will have more financial literacy topics in the weeks to come. Thank you so much for listening.